And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Sunday, September 25th, 2022. I am going to begin right here on the hourly chart. The big picture does not need to be updated. We're really going to just focus on the hourly chart and on down from there. So to review real quick, we are in a larger primary degree C wave down. That remains still in place. And within that, there'll be 5 waves of intermediate degree. And those I've labeled in yellow. And so they're a little bit larger, or the largest right now on the screen. So we have intermediate 1, intermediate wave 2. That puts us in an intermediate third wave going down. What will be inside that intermediate third wave will be 5 waves of minor degree. Now, the catch last week was that we were continuing to look for this to kick in and really start to move the market. And it did basically on Wednesday, but then again, it wasn't strong enough. We were looking for a much larger break to start. Also, what I went over on midweek last week, starting, I believe, on Wednesday, was the fact that this intermediate third wave was subdividing multiple times, which unfortunately does present us with a view that it's like, well, it's not moving fast enough. And when we're getting these little bumps and grinds within the marketplace and the subdivisions, it's because there's a part of the market that's not agreeing with the fact that what's happening, why the sellers are willing to sell, doesn't fit their picture. And understandably, that because, and I do say often, that the markets are quantitative. And that means they're computer driven, they're algorithmically driven. And that makes them more tradable on a technical level or according to the numbers level. And that still remains pretty much in place today. But there are situations in the economy, fundamentally, globally, geopolitically, wherever we want to draw it from, that are happening now that force a different version of what those numbers should produce or suggest. So again, we get very strong into here we are on the hourly, coming right down here on the RSI. Basically, it was telling us, you better start buying it because we're going to bottom and we're going to zip straight out of it. Well, that is what happened. So, but if you were trading on an hourly basis, then yes, you could get in on those lows, and then you participated after hours or into that last hour on Friday, and the market just kind of popped and you made a very decent money. But in terms of producing a narrative that's going to be acceptable to people that are more a little bit longer term investors, they're looking for a bottom. They're looking for to get in. They want to make the big money. They want to start buying things back because they don't make adjustments to the sell side. They just keep buying. So on that basis, they're looking for a much stronger low. And now they get some reinforcements by the market being cyclically pulling into a low, whether that happened on Friday or whether it's still yet to be happen. The market's going to let us know what will change in terms of the other reasons that, particularly right now, inflation, recession, higher interest rates, all of those are headline news now. And what the Fed is attempting to do, et cetera, et cetera. So how do we then want to apply that into here? What I always attempt to do, I don't ignore it because we have to pay attention to it. We have to know what's happening around us because we are a participant within our own economy here in the United States and local economies, et cetera, et cetera. So problems that happen all over will eventually roll down and fall into our lap, and they are. Now, what does that all mean for moving forward? I always lay out what I believe is the wave count, and I allow the market to tell me if I'm wrong or is it something else. And thus far, I continue to hold. But remember what I had mentioned as well, that I had said on Thursday that we'll likely get our answer very quickly. And I thought it would come by Friday. And sure enough, it did. And it came in the way of follow through on all of the 1, 2, 1, 2, 1, 2s. So let's just review that part, because that's what's going to be important now, I believe, in us moving forward within the structure and what we could likely still get before we actually drop into a much stronger, more sustained rally phase. We're going to stair step our way down, and I'm going to tell you it's going to present itself in such a fashion that everyone's going to be believed that was it. That was the bottom. We got to get in. That's the bottom. We're going to get in. Every time we reach a low, they're going to want to jump and take it. That's certainly got to be the bottom now, because that's the third time we've come down here. That's the fourth little new low that we've made. And now I'm going to explain how that's all going to unfold, the way that it's looking right now. So here we are in the S&P. There's intermediate 1, intermediate 2, minor 1, minor 2. So now we're in a minor third wave down. What's inside? 5 waves of minute degree. There's minute 1, minute 2. Okay, now we're in minute 3 going down. What's inside there? 5 waves of subminute degree. What do we have? 1, 2, 3 on a sub. This is a fourth wave. Now, we did kind of gap lower initially, but now suddenly we're going back into the green. We're okay. We're going to move it up. But it fits in the pattern, and it fits in the count that we have a continuing small fourth wave. Now, I'm going to open this up even more because I want to show. I'm going to go down. I'm going to go down to my 15-minute chart. Let's get inside this so we can see what essentially is going to be unfolding. Again, I'm going to go back to that 30-minute chart. Now, what we can see here is right here. There's the 3, subminute wave 3. We're in a subminute wave 4. If anything, I can run fibs from there to there, retracements, but I'm going to go basic on this and then what we have in terms of fib support and resistance now as well. So possibly we can get back above to 37, 27, 28, or if we're looking here, that's 36.59, 30.74, that's 14 plus 31. So we're looking for 45 points off of this low, approximately. So we have 35.86, 40 is 37.27, 38, right in there. So it does fit. An ABC up, we get back up to that resistance zone. We play around the 50s for a while. We eventually break through. That provides some more buyers to move in. They come in tomorrow because we've already hit the lows or overnight. But I would suspect we get a 4. We come back down then. I'm going to go back out to the hourly chart. So we looked at that. It's an ABC. That's what we're looking for. That's likely just going to happen overnight. And when it does, maybe then we're already going to be heading down to put in the minute, subminute wave 5. Now that I still expect that we're going to get this minute 3 down here at 36.02. That just happens to be at the same level where the minor third would be equal in length to the minor wave 1. Now, again, we get a lot of 1s and 2s and everything going in because we're working through a C wave. C waves are always 5s, and they'll follow through all the way down. So in other words, if we're in intermediate wave 1, it's going to have 5 waves. And we're in intermediate wave 3, it's going to have 5 waves of minor degree. And they are building blocks. So we can continue to go down and down until we're at a subminute level like we are now. I normally don't try to count too much below that, but the pattern itself will continue to repeat until that wave and that move is done. Then we'll come down and finish the next move. And when that's done, in terms of putting in another, if we're looking for we're looking for the completion point, folks, of the minute wave 3. And if I'm looking for minute wave 3 to end somewhere down in here, if I'm looking for minor 3 to end here, minute 3's got to end here. We get a 4 and then a 5 to come down and finish the minute 3. And then we do a minute 4 and 5 to finish the minor 3. Minor 3 can finish there or it can drop below 3,600. But I am looking for lower levels before intermediate wave 2 is complete. Now, I'm not going to add, again, the fib extensions because then we got too many. We got too much support resistance all moving in different levels. But what you would do is you would go back out, and at the high, all the way up there, you're going to run it which is basically for minor 3. We're going to do it again, going up to get intermediate 3. So, and again, I believe intermediate 3. In fact, I'll do it so that we just have it in mind. Ultimately, what am I looking for, or what are we looking for on the way down? Go back to the hourly chart. Now, pulling it together. Here is the intermediate third wave. Intermediate third's against the first because of the size. The degree pushes it up bigger. And it quite often on this higher degree, we're going to be seeing that it's going to do more than 100%. We've already surpassed 100%, where intermediate wave 3 would be equal to intermediate wave 1. We're already past that. That brings us down into this level, these levels, 1.236, 1.382, 1.618. That's the next most popular. First, second, the third. Well, the third we wouldn't even look for because of how deep we were looking for it to go. So once we start to get this move going, I am looking for at least 3602. I'm looking for 3476, 75, ultimately for the completion point of intermediate wave 3. Then we get an intermediate wave 4, an intermediate wave 5, and then we're back out to the daily looking to the completion point of primary wave C. So we really are moving along on this, folks. We're not hanging out. It does seem like it's taken forever, and I don't disagree. But it's real important now that instead of having to come in with 100% certainty of where we think the market's going to go, we've got to continue to let the market tell us. And the market basically was already telling us, well, there's a little bit of confusion about what we should be doing here. Do we go up? Do we go down? Who do we follow? Do we follow the Fed or do we follow the technicals? And I agree, it does prevent a little bit of like, what's going on? Stick with the count. That's what I'm going to do right now. I'm going to let the count continue to work its way out. That's what I'm going to do. Because once it's kicked in, folks, we all were there. We saw it. It just went. Thursday and then Friday just went. There was no second guessing. And we watched a lot of the stocks. Now, the rally coming out of that, yes, I was not surprised. The last hour, particularly in Apple and a lot of these bigger stocks, there was just too much on the line to let it close lower. And they didn't. And that's fine. We can't control that, and they do, and that's fine. It doesn't suggest bullishness. It doesn't suggest bearishness. It was the number, and it was what was sitting at that strike price. Now, back to the S&P. For tomorrow, depending on what actually happens all overnight. So again, what I'm looking for right now is the possibility we're going to sit and run back up to 37.28 to 37.30, 31. We do have a little pocket right there. We got the 20 at 37.24. We've got, and that's the hourly 20. Then we have the resistance, 618 resistance at 37. What is that line? Oh, that's a 26. So we have 24.26. That's a 20 and the fib resistance. And then we have additional fib resistance a little bit further out. That's at 37.31. Now that's pretty much what I would think we could come in. And that is actually where that's the A wave, the B wave, and the C wave would equal the A wave up here at this level. So it's about another 20 points from where we are. We have Asian markets to open, then we have the European markets to open. They've got a lot to digest. There's a lot going on around the globe. And it all has to do with inflation and recessions. It's not just us. We aren't alone in this. It is a global problem right now. So I still think that we have still additional downside. But once we reach that, I'd be looking for to put a 4 on that, a sub-minute wave 4. We come down one more time, put in a new low, hopefully right here towards that 3,600 area, which is already pegged for support. And then we're putting in the sub-minute wave 5, and the minute wave 3. Then we do a minute 4. Remember also last week, folks, what I talked about, stair-stepping our way down. So when we got 1, 2, 1, 2, 1, 2, 1, 2, well, you got a 3, 4, 5 of 3, 4, 5 of 3, 4, 5 of 3. Stair-stepping. Fourth wave rally, fifth wave coming back down. Fourth wave rally, fifth wave coming back down. And as you go up a degree, they will increase in size just because it's a higher degree. So minute's going to be bigger than the subminute. The minor should be bigger than the minute. And the intermediate should be bigger than the minor to get us all the way down to put an intermediate wave 3 and then do an intermediate wave 4 and a finishing 5th. That, I think, could take us all the way through October. But we're knocking on that door now. So it's not like this is like a massive, amount. And again, we should be ending up back down below. And finally, I did hear somebody else talk about the March 2020 lows as a target. And whether that happens, it should happen for primary wave C. And the one that as we're counting it, as I'm working this through, it should end up down there. And that's a kind of a big window. We're not that the March 2020 low, but we have that previous 4th, which that March 20, that as soon as the pandemic low, basically, when COVID hit and the uncertainty and the being shut down and not being able to work, boy, everything just kind of tipped and went right over the cliff. That would be that entire move down is the price territory of the previous 4th. But I'm then looking for that to be, and this is the big picture I'm talking, a cycle wave A, and one cycle wave A is done and in, which is what we're working on now. We're just breaking it down through all of the different degrees to get to that low and put that cycle wave A, which will produce a much stronger, more sustained rally phase. That's the one everybody's trying to catch now. But there's too much outside force with reason, with purpose for the market to go down. If we're really going to consider, well, we got to buy it, we're oversold. What if that's the purpose? You may have to come up with a better thought. Not thought, a better reason. Yes, this is what we would normally consider, but the market is bouncing off of a low. But there's enough pressure from the sell side that it won't be able to fight its way through the numbers that want to get out. So that's the situation. And trust me, we've now got a buildup across the board of tons of media. Everybody's got their 2 cents worth. Everybody wants to talk about how maybe something is way overboard, whatever. But the reality is this is what's happening. Now, so tomorrow, I think we get ourselves up there, whether it happens overnight in the Globex session. If it does, and we can count it as complete, I'd be looking for a low below Friday's low at least, which is 36.63. Let me get the right one. That is 36.60, excuse me. So below 36.60 to put in the subminute wave 5 and the minute wave 3. Then guess what? We get another rally. So if they do all of that overnight, well, then yes, we'll know what to expect. We don't get to participate, that's okay. Pick it up where it is, realize what comes next, participate. All right, I'm going to go over to the NASDAQ now, which basically, remember I said that the NASDAQ's going to catch up. I believe that it is. So let me open this. Now we're going to go right into this move, right? So we're looking at the minor 3rd coming off. Same count all the way in agreement, both markets, S&P and the NASDAQ. They started to separate pretty much right in here. But here we are. Now, Still, people, if we really can in one market, still consider, is it really coming off and still this wave one? I can't deny that it's saying no. But what does start to fall back, is it truly just a diagonal, which is going to put in a fifth wave to complete that B wave down, right? The intermediate B wave down that's going to allow us to rise in a intermediate C wave to complete that larger B, primary B. That is out there, but it's again now dropping down in probability. The market is the one that's telling us, folks. So we will continue to monitor. There are levels that would need to be broken if it is, but in the meantime, I'm trading day to day. Now, here we are, 1, 2. Let me just pull this out again. Intermediate 1, intermediate 2, minor 1, minor 2, minute 1, minute 2, subminute 1, subminute 2. Okay, so how do we want to deal? And let's, okay, come on, folks. Auto, let's put, there you go. So 1, 2, 1, 2, 1, 2, 1, 2. So what do we got to do? We got a 3, 4, 5 of 3, 4, 5 of 3, 4, 5 of 3. So stair stepping, same deal. So this is where the S&P, this is where the NASDAQ caught up to the S&P. S&P is counting minutes within the third. So it's the NASDAQ. So we have the minute 1, minute 2, and then we're looking for this 4. And I think we also had the same deal. And if I just do 225 up to 395, we got 170. From here, puts us up to 14. I think that's not going to get all the way up to 1480. Am I wrong on that? 12,000. 11,225. That's where I am looking at, 11,225, and I'm going to track that 11,225. So 225 is 176 or 175. 175 points under this is 1485. Do I think it can get up to 1485? Yeah, it could. Be quite a little bit of a rally. But I think what we got in between is and again, remember, it's just a subminute wave 4, and we still got to fight wave 5 down. But they tend to get more excited in the NASDAQ. Right now, we do have resistance up here at 11,400. Then we have the hourly 20 at 11,421. We've got resistance at 11,431. But it could slip and come back up and get as high as 11,475 and still be a small fourth wave and still take us down, get us below 12,002. This guy is 229. And on down to next support, which actually right now is where minute 3 would be equal to minute 1. At 11,205. I think we go past that a little bit. But it might, if we can get bring it down to here, and that finishes the minute 3. We do a minute 4, minute 5, and now we're beginning to head down into the zone where I think we should be finding some completion points, right? Again, the minor 3, we're looking for like 10,924. For the minor 3, do a minor 4, and yet another one to bring us down towards 10,840. And even actually, yeah, I'd have to go back. Let me go back out here and put this on here. Yep, got it. I want to take a look at the intermediate third. That intermediate third is going to be these outsides. So these are the minor, minute. And here we have where intermediate 3 would be equal to intermediate wave 1, and that's coming in at 11,185. But I had anticipated that we could get as low as 10,060 on the intermediate third, that still stands. And then if we're looking for where primary C can come in, then we're going back out again to the daily, and we're looking at A and the B and the C. So this would be the A and the B. So you got to go all the way back up to the high. You come all the way down to where the A wave finished, back up to here. And now you're looking at for what C wave should do. So again, we're looking at a C wave bringing us down to 100% would be 8,000. And that's where primary wave C would be equal to like the primary wave A, 8,041. How could that all fit? It can. We're edging closer to recession. We're edging closer to the interest rates continuing to go high. We're now going to be moving into to find out how has all this inflation, supply chain, all of these different things, what now is it affecting, and how is that going to play out? That's going to be reality. Regardless of what the technical picture is telling us, the reality is when we stop, we do not, or we fail to pay attention what the company's numbers are telling us and what the CEOs and the CFOs and all the people that are reporting to us tell us about what they anticipate, just like Ford did. Ford anticipates a very large hit to earnings because their costs have increased. What's going to be the result of that? Well, one thing would be is that the market, being us, the consumer, will have to bear the brunt of paying more for what we want. You want a new car? It's going to cost you more. Why? Because their cost was higher and they still have a profit margin that they need to adhere to. Same thing coming off. Apple, Amazon, Boeing, Google, all of them are going to have that same deal. So it's going to be very important as we move into earnings as to what exactly are they going to tell us? Everything's rosy. We're running on 110 cylinders, and we're just like pumping money. We're just making, and it does not costing us anything. I don't think so. Apple has warned about that they're going to have to start laying people off. This is going to be helping out that we don't fall into a recession, even though it's likely we will. So anyway, I'm just no joking here, but I'm just trying to like A, submit some levity, but two, realize we're at that point in our markets where reality and expectations need to meet up and agree. And that's how we're going to finish all these waves. So I need to start ticking some of this off so that it's not going to be so confusing. And so now we just have the three. And I'm going to take this guy off and we'll go from there. So in any case, I'm looking for the market to kind of go finish the 4, come back down in the 5, go back up in another 4, come back down in a 5. And we have our levels. So that's where I'm going to keep it. Have a great trading day tomorrow. Should continue to keep interesting. And our next update will be on Monday, September the 26th.